Hey everybody, it's Mike. Good morning, good afternoon, good evening, depending on where you are. I'm in Chicago, so it's 11 o'clock. It's not quite afternoon yet, and I don't even like to call it 11 o'clock morning. And I'll get started here in a second. I'm just going through a couple last minute checks to make sure everything is working fine on my end. And if you hear me get silent or if you hear me coughing, I am battling a flu right now. I'm getting better though, but there might be a moment where it just overwhelms me and I have to start coughing. I'll try to do it off to the side. But let me just go through a couple last minute checks here and I'll get started. Okay. All right, looks like everything is good to go. So I'll get started. So, what I want to talk about today is, we finally released this indicator. It's called the Show Hand Indicator. And and really its whole point is to help traders see where institutional trading is taking place in the market. Now, when a trader is executing a large order, right, a big institutional trader, that starts to become obvious in the order flow. That trader is, quote, showing his hand, right? That hence the name, the show hand indicator. And characteristic trading behaviors that reveal a trader's strategy or position are such as a large trade taking place relative to surrounding volume. It's something that sticks out pretty easily. Repeated trades at a specific price levels on the bid or offer, and consistent order size or refreshing, right? An iceberg order. People always talk about iceberg orders, and they do have an impact in the market, especially when a market is moving in a direction, right? If the market is going up and you see an iceberg order on the bid, that's providing support to the market, just as if a market starts trending down and you see an iceberg order on the offer coming in, it shows that there's more selling at a level on the way down, which is important information. Now, when other market participants can figure out a trader's intentions from their visible trading activity, it leads to front running by other traders, right? If you've ever um, studied or practiced trading on the price ladder, right? The depth of market, the dome or the dom, however you want to call it. I had some guy make, you know, the literature police come out to me and say, no, you're saying dome like DOME and it should be DOM. That's semantics, right? There's bigger things to worry about in the market than whether you're pronouncing the dome or the DOM correctly, right? Some people say tomato, some say tomato. But if you've ever traded that way, you know that when you see a big size order come in the market, what's your first inclination to do is sort of jump in front of it, right? Sort of front run um, that activity in the market. And when there's a large trader, with a big order in the market and it's known, well, what happens is you often have a quicker market movement, right? In the old days when it was, still trading in the pits, it'd be like, if you're on the floor or if you're, on the phone with the floor broker, if you're an institutional trader or at a squawk box, oh, Goldman's is buying. Oh, Goldman's is buying, so they're having probably a big order. Your inclination is to sort of jump in front, and that's what a lot of locals would do. On the floors, they see Solomon Brothers is bidding, you know, 50 for 300. They'll jump in and because they know that that's probably a legitimate order. That's something they can lean on. If they're wrong, they can go against. And unfortunately for the big traders, right, once their intentions is known to the public, that increases their execution costs, right, because they end up having to pay a worse price. So what they're really trying to do is they're trying to hide their intentions. And the show hand indicator is designed to alert you when the big trader is active in the market, right? Sometimes it's very obvious. This was this morning, right? This was in E-minis. This is a range-based chart, and there was a big bid, or sorry, big offer in the market this morning at 45. You can see the big size coming in there, 1140, 2444, right? And you had a nice little sell-off this morning. This was just after the cash open. Other times it's not so obvious, right? It's kind of massaged in there with the normal volume, okay, and what looks like just normal volume coming in, and you might not pick it up. And that's what the show hand indicator is designed to do. It's designed to show you, it reads the order flow. You do not need a footprint chart. It is not a footprint chart. It's an indicator that will run on a normal bar chart, or I don't want to say bar chart anymore. Really, the term, hardly anybody looks at bar charts. Most people look at candlestick charts. 90%, probably 95% of people that don't use footprint probably just stick with candlestick charts, not so much bar charts. So over the years, how have institutions responded? Well, the first way was to develop more sophisticated order execution strategies. It's not so much as, they've got 1,000 E-minis to buy, you just buy 1,000. No, they break it up. They got waves, subwaves. They'll work it in over a certain time period or percentage of volume, work bids, lift offers, etc. If it's depending on if it's buy or sell. So they're going to break it into smaller pieces. Um, but the beauty is, with order flow, when something trades, it shows up in the time and sales, and as a result, it's going to show up in the footprint, right? It's going to show up in as a trade that took place in the market, right? Because really what we're looking at is actual trades that take place in the market, not bids and offers below the current bid or offers above the current offer. What we're dealing with is traders' actual commitments to the market. They actually got into a position, right? Or potentially got out of or trying to get out of a position. Okay, because remember, not every trade, it's easy to think that every trade that you see going through the market is a new position being put on. Sometimes it's a position that's being taken unwound, right? Being taken off. So, breaking orders into smaller pieces really disguises what they're doing a lot. Right? The whole point of an iceberg is to disguise the order and show the minimum amount possible without affecting the market. And sometimes they're going to create false signals to mislead pattern followers, right? People that watch a footprint, or not necessarily a footprint, but watch, a simple bar chart, a candlestick chart, looking for patterns, okay? And really what you want to do is you want to be able to identify where the institutional buying or institutional selling is coming in. This is crude oil this morning, okay? I'm going to take you through real charts, real examples, just from today, okay? Just keep it simple. I chose today. Today is Veterans Day. Market might be, a little bit lighter than normal. So, just bear that in mind. And to be honest, last week was the election and the markets were extremely volatile. Last week is not necessarily indicative of what every week looks like in the markets, but it was a crazy week. Honestly, I know for myself, I was looking forward to this election being over and I could sort of get back to my normal life. But I think it's going to be a little bit of time before I get off of Twitter reading the news about the elections and all that stuff. Now, I'm just going to take you through the settings really quick here. Okay. So, when you load the indicator, right, you just load it as a normal indicator, right? You download the zip and then um, you just go to the NinjaTrader control panel and you just import it. You would any other third-party indicator, right? You just click on tools under your thing. You'd find show hand, and then you'd import it. Okay, I'm not going to do that right now, but I've already done it. And then you're going to install it on your that installs it on the chart. So what you're going to do is you open up a chart. For today's purposes, I'll just stay with a candlestick chart as opposed to a footprint chart. But you'd get the same signals whether you're using a footprint chart or a candlestick chart. It reads the order flow. Okay, so a couple things to note on your chart. You'd have to have tick replay enabled to see the historical signals. Okay, and once you open up your chart, what you got to do is you got to find it in here, Orderflows Show Hand, click on it so it appears down here, okay? Then you're going to enter in your license token that is sent to you separately after you purchase, okay? Very few settings, and I'll just take you through them really quick here. I'll just get my slide deck up here because I have it on this. Actually, I got it on a in here. So really the settings are, there's a swing filter, right? Enable swing filter and the swing period. The disparity range, which is the main one, I'll discuss that in a moment. Prominent point of control filter. So if you want to have signals where the bar has to have a prominent point of control, that's the setting that you would enable. The momentum strength, which is if you want to catch the signals only in a strong directional move, that's the momentum strength. We have a sound alert, and the other one is trade entry signal. So just really quick, the disparity range is sort of the main setting. Okay, it's the most important setting, and the default is set to 150. So when you first load the indicator, it's set to 150, which is kind of mid-range, actually a little bit stronger than mid-range, and it's the measure of strength of the institutional order flow appearing in the market. And if you're going to ask me what goes into the disparity range, not disparaging, disparity range, is how the order flow is being transacted in the market, relative to surrounding volume. Okay, and that's going to give you the clue as to is there actual institutional activity or not? Because what's the sign of institutional activity is an uptick in volume that is out of the usual range. So the lowest level you can set it to is 50, and that's going to cause the most signals, right? Because that's the minimum strength. 250 is sort of the highest. I mean, you could put a higher level, but really 250, I think, is about as high as you need to go. We even wrote in there disparity range of 50 to 250. And of course, when you go higher, to 250, you're going to get fewer signals because it's about the highest measuring. Because to be honest, once you get above 250, there's not much difference. It's the highest measure of institutional activity appearing in the market as measured by the indicator. Now, while you can enter any number between 50 and 250, like 89, which is a fib number, you could enter 51, 52, 53, all the way up to 247, 248, 249, 250. Honestly, I just prefer to go in multiples of, say, 25, meaning like 50, 75, 100, 125, 150, 175, 200, 225, and 250. Again, you're free to set it to whatever you like. I just find that it's easier to sort of keep it in multiples. I mean, I use 25. Some people might want to use multiples of 10, but whatever. You can use any number in between there. Now, one of the other filters is the prominent point of control filter, right? And it's disabled. To enable it, you just click on there, on that box next to it. And what that would mean is the bar would have to have a prominent point of control, right? Prominent point of control is a point of control in the bar that matters. So if it doesn't have a prominent point of control, but it has, it's within the disparity range and say the momentum strength, but you have prominent point of control filter enabled and there is not a prominent point of control, it won't give the signal, okay? So just bear that in mind, especially if you're in some markets that are, like MNQ or NQYM, and you're on like a minute-based chart where you're not going to get a lot of prominent point of controls. You're going to filter yourself out of a lot of trades. Now, the momentum strength, the default setting is set to 6, which is the strongest level. Okay, and what the momentum strength does is it just measures the momentum of the market. To disable it, if you don't want to use any momentum strength, and I'll show you guys some charts with it enabled and with it disabled, you would set it to 0 to disable. And again, 6 is the strongest. 1 is sort of the minimum amount of momentum. 3 is kind of the average. Obviously, 6 is strongest. You could still use 2, 3, 2, 4, and 5, which is just getting a little bit stronger on the spectrum. But me personally, I either use disable or 6. Sometimes I'll just use 1. Again, if I'm testing, I'll use 1 as just sort of, what's the minimum amount? Is there a difference between the minimum and not? Now, before I get into some of the charts, we'll come back to this. These are sort of the common settings that you would use, like 150 disparity range, which is the default setting, right? Which is set for most markets, 150 and 6, okay? Then I'm going to show you the range of 150 and 0, 0 meaning momentum, 150 and 3, 50 and 6. 50 is the lowest disparity range, with 6 the highest momentum. and then the lowest with say 0 momentum, and then we'll talk about the swing filter, and compare like 103, 100 disparity range and 3 momentum versus 106. Okay, and momentum filters. All right, so let's just go to the charts here. It's really quick here. So this is crude oil. Okay, I see there's some questions coming in. Yes, this is going to be recorded. You'll be sent the recording um, as well. And these things like the settings, I'm gonna put that in the. I mean, it's in the recording as well, but you know, it'll be there in the user guide as well. Um, well, if you don't care about the past historical settings, you should be able to run it without tick replay. Okay, but honestly, it doesn't slow it down. There's this misconception that tick replay slows things down. If you're on a, I don't have any issues with speed or anything like that. So let me just here show you. But for now, let's turn this off. Well, no, this one does require it. I'm sorry about that. It does require it. My programmer made this pop up here. This indicator requires tick replay to function properly. Okay, so it does need it. I apologize for that. Um, but it's sort of a new feature he put on these. Ninja Trader keeps making some changes on the back ends, and sometimes the stuff now requires it. I know before in the past, like with 7, you could get away with it. But anyway, okay, so this is the default settings here. Okay, 150 and 6. So you can see swing filter is turned off, prominent point of control is disabled, and I have this. We'll talk about this later. The trade entry signal. Okay, trade entry signal is kind of like a filter I use to keep me out of bad trades. And what it means is, the market has to be moving in the direction of my trade relatively soon. It's got to move at least 2 ticks within 3 bars in this case. Okay. So crude oil, right? Default settings, right? Just go through some markets really quick. Just the main markets, right? I'll discuss today. This is, what is it? Euro currency right here. Okay. Crude and euro currency actually seem to be moving very similar. Gold also selling off today. Um, quite nicely. Gosh, we sold off from 26 here. Zero we're consolidating around 26.80. Gosh, we're down. That's a big move, or 60 rather, not 80. Down into the 20s. We start seeing some buy signals come in. Bonds, ZBs. Now, ZB bonds move a lot slower. Okay, so there's actually no signals today. Today's kind of quiet in the bonds, but you see like on Friday. And again, I'm going to talk about this here in a second. The different settings. So these are the default settings. Okay, and well, let's take a look. MES. What MES do? How's that looking now? I think. All right, this is MES this morning. Okay, I'm going to talk about these lines, what these lines represent, these zones. We'll get to that. Don't worry, guys. All right, so let's just play around with it a little bit. Okay, so again, default settings 150 and 6. Momentum is set the strongest. Okay, if you take off the momentum, let's leave this here. So you can see 0 is to disable it. now it's looking for signals that appear anywhere, right? It could be, so you're getting a bit more, right? Before you had, okay, let's get my crosshairs here. So let me make this crosshairs a little bit stronger, right? So you got like a buy signal here, followed by a sell signal. Um, a couple of little more buys. The sell wasn't there before. Using taking when you take momentum off, right? So let's compare it really quick. 0, change it back to 6. Okay, so yeah, so that sell is gone, your buy is gone. Now, just really quick, right? Trade entry signal. So you can see like there is this little blue zone here, this little blue zone here, right? There's one here, some stuff in here, these little zones being drawn out. What that's telling me is that there was conditions were met for a potential buy or sell signal, but the market's not moving in the direction that I want it to move in the time period that I um, have told it to. So, right, you can see here it's through 2 and 3. So price level in ticks is 2. So it's got to move 2 ticks from, if it's a buy, from the high of the entry bar, or for a sell from the low of the signal bar, rather, not entry bar, from the signal bar. And it's got to do that within 3 bars. Okay, and again, I put a max on here of 5, so you're not getting a signal appearing, and then it takes, if you're on a minute chart, it takes 10 minutes for it to move. No, when something happens in the order flow, I expect to happen sooner rather than later. If I disable this, right, so you're going to see up here maybe a signal, some signals that don't really work out, in the sense that, if you take those trades, you'd be stopped out. Right now you see it coming in here. You see this buy signal, right? If you took this buy signal, you'd be stopped out. If you took this buy signal, you'd be stopped out. Some of these shorts, you'd be stopped out. Some of these longs, you'd be stopped out. That's why I have that option in there, trade entry signal, specifically, right, to keep me out of these areas where the market doesn't follow through. It could just be a big order going through the market, right? That's causing the order flow to give you a signal, right? Right, so you don't see the buy here, the sell here, because that's, in choppy markets, that's what's going to happen to you and get chopped up. You really want the trades that are going to, be explosive, that can happen because the market is starting to move in the direction. Okay, now these zones, you could choose to have them or not have them. Excuse me. I like to have them. That's this under the visuals, signal box draw mode, which is until tested. So it's going to draw it out until the price comes back to those levels. If I don't want to use it, I would change this, where is it here? Signal box width to 0. Okay. And then that would basically cause it to not draw out the zones, right? If you have it until, there's 2 ways you could do it, right? Until tested or fixed, right? So you can see here, it's just giving you the actual signals. Again, it's up to you if you want to use those or not. The other way you can do it is fixed, okay? Which, if you just wanted out, a fixed number of bars, say 5, right? I changed it to 5. I have it fixed. What it's going to do is going to draw out that blue or red zone, blue for bullish or red for bearish, over the next 5 bars. Okay. But, I'm kind of a visual person. So when it's fixed, right, you could do it one, you could draw it out 50 or 25, however you want. I just like to keep it in fixed here. So when it's fixed, it's being drawn out until the price comes back to those levels. Okay, because if I see something, right, if I see the market going up, right, rallying, we get a high, start coming off, and I see, oh, I got the zone being drawn out. If it's like this, right, I think, hey, we got a zone starting to be drawn out here. Where can we trade back to? Is these levels potentially? Okay, and we come right down to these levels, rotate around, then I got another zone being drawn out here. You see how the market comes right back to it. Okay, but don't get fixated on these zones, as the market has to come back to exactly that level. It's nice when it does, but I mean, you could use these as stops as well, if you're long. But when I see a market start running away from, starting to create a zone and starts to run away from it, to me, that's a good signal. Okay. Now, so that's 150 and say 6, right? If you were to lower the level, right, 50, right, which is the absolute lowest I think you should go, okay, and you have even momentum strength still at 6, which is, on the side of momentum, you're going to get a lot of signals, right? It's going to capture every move in the market pretty much, but probably going to capture some moves that you don't necessarily want. Um, and would you use 50? Some people um, might, because I know some traders, they like to have a reason to add on to a position. Okay, and if you're getting a lot of signals, you could get long, you could add on, add on, add on, you know, finally get your reversal signal up here, get short, get short, get short. Again, it's not for everybody, but again, if you're trading something like in the overnight session, with slightly lesser volume, you may consider it. Okay, now that's with momentum strength. If you're using such a low disparity range, 50, I do recommend keeping the momentum strength on. If you turn it off, you're gonna get, you know, a lot of signals. Um, and just show you here real quick. Again, if you're trading in the evening time, don't forget, institutions also trade in the evening time. How do I know? Because I've done it. I did it for a long time. So you can see a lot more signals here, which again, for me personally, if you're going to use 50, the lowest, I think it's prudent to keep the momentum strength turned on to its highest level. Um, but you can see, like in other markets, right? Like go back to crude oil. Okay, so this is 50, the lowest, right? You see a lot, right? That's with the momentum strength set at 0, right? I do believe you should enable it, right, to sort of keep you just, on the side of the way the market is going, for the most part. I mean, it will run into some areas like this where it struggles just because the market is going sideways. But again, you have it set so low that there's probably not going to be very effective. I think 50 is too low, but again, you could adjust it. I had sent out an email the other day with fib numbers. I know people love to use fibs. I mean, you could use 89, right? 89 is a fib number. Just show you here, 89. But again, you don't have to use 89. You could use 75. You could use 100. Um, this is that's a 1 minute chart. Even if you go like on even a faster chart, say a 30 second, it's funny, sometimes people, oh, I can't use a 30-second chart, but then they'll use like a 4 range chart, which is, just as fast as a 30-second chart. Um, so as you go a little bit faster chart wise, I think you do need to consider what you're putting on as your disparity range. Faster chart, I think is better to have a higher disparity range. This is again on the 30-second chart. Now, if you're on a market like say bonds or we'll take a look at ultra bonds here. Okay, ultra bonds 150 and 6. Again, if for ultra bonds, if you went down to say 89, because it's a little faster moving market, you can catch some of these moves that are taking place. I don't even know if you might want to adjust even the momentum strength. I would go down, cut it in half to 3 and see how it looks. Looks very similar. Even if you went down to 0, it's still basically the same. Okay. You see how it was on Friday. Let's go look at say euro currency. Oh, wait a second here. That's a 30-second chart. If you go to 30-second on ultra bonds is wishful thinking, but it still gives you an idea. Okay, so this is ultra bonds today and Friday. Forgot that I had it on the 30-second chart. Short here, way down. And again, this is with 89 and 0 on the momentum strength, right? If I had it set at 6 on momentum strength, right, it doesn't catch that one up there. Now, swing filter, okay, so if you're going to use swing filter, you would not use momentum strength, right, because it goes against each other. So you'd have to turn momentum strength off by setting at 0, and swing filter whatever your period you want, right? Default is 1. I don't know. You could probably set it as something like 5 for a swing. So it's just going to capture the swing here, swing here, swing here, swing highs. There's no signal on swing lows. Going back a few more days, you can see it there, like euro currency 6E. Right here, you're trying to pick swing highs and swing lows. Okay, crude oil. And again, if you don't want to use these zones, you can just disable the zones. I just like to see it. For me, it's more visual. Okay. So yeah, you do need tick. You do need the tick replay on. I apologize for that. It does need to be on. So there, just okay. So someone asked about some more examples in bonds here. Okay, so for example, bonds. Let me turn off the swing filter. If you were set it as low as possible, 50. Okay, because bonds tend to be a slow moving market. Okay, I'm going to turn off the momentum strength, setting the range at 50. Now I do have the trade entry signal turned on. Okay, now again, today is kind of a quietish day, but you can see here, right, with the trade entry signal enabled, you just have the one trade today. If you disable the trade entry signal, you're going to see signals coming in, here, 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 here. Now, again, it's up to you whether you want to use it or not. I am a big believer in it. What you could do also is you could enable it and you could set it at 5 and 5, sort of the max. So it's got to move with, actually, hang on here. What am I doing here? No. Trade price level in ticks 1, which is the minimum. What I was doing, it was telling it to, so here, right? Signal, signal, signal. Thing to remember, trade price level in ticks. it's got to move. If you set it at 1, so what that means is it has to move 1 tick within the next 5 bars. Okay, so when I have it set at 2 and 3, means it has to move 2 ticks within 3 bars, right? The default is 2 and 3. By making it 1, it's got to move 1 tick within 5 bars. Okay, so you can see here, right? Signal, signal, signal. This is bonds. If you go back to another market like tens, ZN, same sort of settings. Let's take a look. Let's see, it says calculating up here in the corner. This is the bonds. So a couple short signals, longs, shorts, longs in here. So, for slower moving markets like interest rates, right? Let's take a look at ultra bonds. For generally slower moving markets like interest rates, you can disable the momentum filter. Right, here's ultra bonds. Right, this is today. Go back, Friday, last night. Friday. Me personally, I like to use. I like the move to happen sooner rather than later. That's why I have it set at 2 and 3. But again, if you want it to say, hey, you know what, it's got to move 1 tick within the next 3 bars, you could change it there, right? And you'll probably get slightly fewer signals, right? Or you could even move it to 1 and 1, meaning the next bar has to start making that move. Here, it's got to move 1 tick in the next bar, meaning it's got to move in the direction within 1 tick of the next bar. Okay, and you can see how it looks there. Good contract that not many Americans are familiar with is Bunds. The German interest rate, German 10-year trades on Eurex. Yeah, you see, all bearish in here, bullish on the way up. Obviously bearish here, all bullish here. This nice big move up, nice big move down, a little chop back and forth. But again, you have it set at such a low number, 50 and 6, or 50 and 0. If you made it 50 and 6 on the Bunds, it cleans up some of that chop that was there. Does keep you out of a couple of these shorts from a little bit higher, but you can still capture most of the major move in the Bunds. So, if you're in Chicago or the US, and you're up around 1 in the morning and can't sleep, take a look at Bunds once in a while. Again, that's on a one. Bunds is actually a market. I think you could even trade good volume. Could even go down to a shorter time frame, 30-second chart. Even there's some nice moves to be had in Bunds during the trading day. Now, just really quick here, there's about 40 or 50 major futures markets out there, okay, but not everyone looks at them, and it's just interesting because sometimes I get letters from people saying, hey, what about this market? I'll get that in a minute, but one of them is Swiss franc, okay, and Swiss franc is a market that not everybody is interested in trading because it's kind of thin at times. You can see in here, right? This is in the morning where it just trades one contract, one price level. So it's a lot of these flat lines, okay? But this is I just want to show you something really quick, okay? Just scrunch up this chart, get this morning here, okay? So you see, during US hours, much more volume. So you're seeing these bars. But and again, this is a 30-second chart, which is kind of quick. So this is a 50, this is set at the minimum volume, right? 50, or disparity range, not volumes, disparity range of 50, with the momentum strength of 6. Okay, so you're seeing um, you know, a lot of signals. And sometimes, people are like, well, how does it look on, like a 5 range chart or something? You know, as you can see, it's just a little bit more pronounced, all the institutional selling. And for some people, it's like almost every bar has got a signal on it, right? Which is, the selling, this is where it gets interesting because you see the red bars all got like the shorts on. You don't see any bullish green, any signals on these green candles, any the blue arrows would be bullish signals. This just gives you an idea of the amount, of the type of selling that was taking place overnight, right, in the Swiss franc. Even though, if you were to look on the footprint, you see it's kind of, it looks like light volume, but it's being detected as, it's actually institutional selling. And you see this market's been under pressure all night, basically. There's been some buying that's come in. Right now, for the last several hours, we've been sort of consolidating in here, and you see it's kind of mixed. But all night, it's just been under pressure, right? That's why you don't see any of the, the buy arrows. But if you know, bump up the disparity range to 150, where it's going to become a bit clearer, right? You could see even in here, right? Just you got less signals, right? The less triangles, but you can still see the strong selling that's taking place in this market from, overnight, right, down into the mornings. Um, yes, everyone's asking, will there be a copy of this presentation? Yep. There is a recording. It's being recorded now. Hang on a second, guys. I got a cough. Yeah, sorry about excuse me. Sorry, I just had a cough. Um, okay, let's take a look at some questions here. Okay, so Jean-Pierre asked, how does it catch the big hands? Well, what it does is it reads what's going through on the order flow, okay? And it's from there, on the footprint. It does all the reading of the footprint for you so that you don't have to sit here and try to analyze it yourself, okay? Um, if I were to put it on here, right? Because, when you look at a footprint, unless you know exactly what you're looking for, then okay, just make sure here, show hand. This is just the default settings. Um, unless you know what you're looking for in the footprint, right, it's going to be hard for you to understand what you're looking at. Let's go back to the minute chart here. Right, so it does that heavy lifting for you, right? So it gave us buy signal. Let me make sure I got the right signals on here. What I'm going to do is I'm going to make it much bigger, make it 15. That way it'll stand out more. Okay, so you can see that the sell signal is reading what's going on in the order flow, right? Here's your big arrow up here, the bullish signal. So it's reading what's taking place here in the order flow, right? So that you don't have to do it. There's a sell signal there. Obviously some buys coming in here, okay? Because again, if you don't understand how to read order flow, and again, this just reads a certain aspect of order flow. This doesn't replace a footprint chart and read all the different aspects of order flow. What it's doing is it's reading the volume trade on the bid, the volume on the offer. It's doing its analysis of the volume and is basically telling you if it's bullish or bearish. Okay. Well, it doesn't filter on volume. Don't think of it filtering on volume. The disparity range is the algo basically. Okay, it's not volume by itself because every market trades different different volumes. To say you were going to go look at live cattle futures, okay, here, right? The bearish signal, bullish signal right here before it jumps up, right? On this move up, on this move down. Um, every market trades different volumes, right? I mean, you can see how the volumes are here, right? In say this, this is euro currency, okay? But if again, if you change it to cattle, LE, you're dealing with much different volumes in the markets, okay? Which much lighter, but you're still getting the buy and the sell signals, okay? So it's not pure volume. Let's see if I asked, how does it work on longer time frames? Okay, like bonds. Okay, let's take a look here at bonds, and 5 minutes, 10 minutes. What setting do I got here? So 150 and 6. If I'm started going out and further in time, anytime I'm testing a new market, I would drop the disparity range down to the lowest. I'll turn off any filters I've got on. I would still keep trade entry signal, but I'd probably make it 1 and 3. And again, starting at the lowest range, 50, that's probably too low for me. But it's a starting point, right? Then you'd go, back to, then you can either put the momentum strength on. If it looks like that's too messy in the sense of too many signals, then your disparity range is set too low. Then you might want to add on the momentum strength, clean it up a little bit. Okay. Maybe bump it up to, whatever, 100. I mean, I could say 89. 89 is a fib number. There's nothing magical about it other than being a fib number. You can start to see, that's not a nice signal there. I don't really like that. Go a little bit lower, 75. Similar signals. This is on but again, today is kind of a quiet day. Go back to Friday, the day before. That's on a 5-minute chart. Go 10. Sort of the same settings. No, 15 minutes. Honestly, on days that it trends well, looks better than choppy days. But it's just one of those things. I don't look at bonds more than 5 minutes. Well, for me, if I'm looking at a minute-based chart with bonds, I'll go about 5 minutes is about as far out as I would go personally. Again, you could even another thing you could play around with is turning off the trade entry signal as well. Right, but again, you probably don't want to take some of these trades like this short here. So with the trade entry signal will keep you out of a trade like this one here, or a trade like this one here. Steven says, yeah, I got run over by the Swiss National Bank once. Yeah, I remember that. What year was that? 2016. A lot of traders got run over that day. So it was a long time ago. Not a long time ago. It's 8 years ago. But yeah, I always like to look at Swiss franc just because that was when I started on the floor. That was one of the Swiss franc and Deutschmark was the markets that I was focused on. So I always have that in the back of my head. Um, I mean, yes, it's all the same. Um, a lot of these markets, there's not much difference between, how they trade. So you could, I said the default of 150 and 6, it's a good starting point for all markets. Even, then when you get into some, this is with trade, this is, what do we got it set at here? 75, which is kind of low. Trade entry signal turned off. I do believe, on an equity market, you do need to have it on. Um, Again, the default settings of 150 and 6, I think is, you know, a good starting point for equities, E-minis, NASDAQ, and go from there. Dow, we had that big run up this morning right off the cash open where we rose, what we go up like 200 or 300 points. But I don't think there was any buy signal with that default setting. I know some people say, well, it didn't catch this run up here. Okay, well, sometimes it doesn't catch that run. I mean, that was a monster move from, again, this is a 5-minute chart from, 300 all the way up to 600. But on the 1-minute chart, I'm pretty sure it didn't catch that. There's other things it could have caught with the order flow, but you can see this morning, just, overnight since Europe, it's just been all institutional buying. This is the 5-minute chart. Sorry. But if you go down to 1 minute, right, remember that was that big move up here. This is, what's the indicator setting? 75 and 6. But at 150 and 6, I don't think it caught it. So again, you got to remember, right, the default settings are just that, this default. It's a starting point for most markets, but some markets, depending on how they move, if they're very fast moving markets, you probably, want to adjust it more for your market. Because, on many now, people say, well, look at this, this was failed, that failed, these failed. But since this morning, early, right, it was catching the institutional buying earlier. But this is just a volatile market. Volume is being distributed throughout bars. I mean, you got a bar that jumps from 321 up to 4 or to 381. So it's was that 60-point move. Then next bar another 60 points. Next bar another 60 points. Volume is being spread out, so it's going to be hard to really capture what's taking place in there, just because the volume is not distributed normally. Okay, and it's almost as if there's, when you're trading, if you have ever traded in the evening session, evening means, anytime from, the Asian hours or European hours versus the day session, the volume is going to be different. Okay, so for most normal markets like Dow, during the evening session, you could use the default settings, but during the day, you might need to adjust it. Question here, will it work on Renko charts? Well, depending on the Renko charts that you're using, if you're using the native ones on NinjaTrader, I think of the name, it won't, because you need tick replay, right? And it doesn't use tick replay. But if you're on a chart like, say, Heikinashi, that you're using tick replay, you can do it, right? Now there are some Renko charts that do use tick replay. I think, I can't think of who. the indicator store. Pablo's got a tick a Renko chart that uses tick replay. Actually, I think it's for free on his website, but you got to have tick replay to use it. Okay. Just curious. I'm kind of curious here. So this is the Renko chart. Anyway, let's go back here to a simple. Can you show trade entry example? You show that for an E-mini 1 minute chart. I got a problem with my E-mini data today. I'm just curious, is anybody over the weekend? So like this data comes from Kinetic, or not this data. This one I have on my other PC, Kinetic data. And over the weekend, I got a huge bill from them. Apparently, they screwed up their billing. It was like thousands of dollars. But as opposed to this data comes from NinjaTrader Continuum. But Dave, I'll get to your question privately there about the E-minis. Can you use the indicator on line break charts? I don't know. Line break charts. I have a line break here. Well, no, because you need tick replay, right? If you don't have tick replay, it won't work. Okay. But you could use it on volume-based charts. Right? You could use it on tick. I don't know. I don't know what is a good tick chart for this market. Right? And again, depending on the different type of chart you're using, because again, not everybody uses the same chart. So you probably need to adjust your disparity range, your momentum, strength, etc. If you're on a tick-based chart. So for example, say like soybean meal. Okay. I wouldn't use a 250 tick chart there. I'd probably use something like a 50 tick chart. Right. And catch some nice moves down here. People say, wow, why soy meal? Well, this is from here to here is $200 right there. Right. And this little move that you got going on here, 296.70. It's already like 60, $70 move. Again, you'd have to adjust it based off of your market. You got to do some testing. I can't give everybody one set of settings because every market is incredibly different in terms of volume and how they trade. So, while it's pretty good in capturing, in terms of the default setting for most markets, you can sort of, I don't want to use the term optimize, but there's going to be times where you could get, by lowering the disparity range or making it a little bit stronger, or by using a swing filter, or by using the momentum, that's going to help you sort of zero in on what's a good set of settings for your market. Okay. Let's see here. MS and Q. Well, NQ, MNQ, similar. So I'll just throw up MNQ. Okay. And I believe this is the default settings here, 150 and 6. Right. So going back there, kind of a choppy Oh, that's 50 tick. That's why it looks choppy. Just going back to the 1 minute chart. But again, even when I look at MNQ, I don't look at a 1 minute chart. I prefer 30-second chart. Okay. And again, this is with the default setting, um, which might, again, this market trade, it's got a high volatility relative to, other markets. So you might want to lower the disparity range from 150. Again, I've sort of fixated on 89 for some reason, but you could use 100. So you could see here again, it's nice. You're fighting against the current there, but then it gets you right here, gets you right here, a little back and forth out of the cash open. Once cash opens, the big push down, institutional buying coming in here, a little back and forth. So 89 might be too much, or sorry, too little. So again, you could adjust it to maybe 100 or 125. You see how some of these come right back to the price here, here, here. But again, I don't use these as potential targets. Like say I get a zone drawn out here, or I just drop an offer looking for the market to come right back to this level, and then sell off. But if the market's going up, it could be an area to take profit. Because you see every time it came back up to this level, it just sort of rotates around, rotates around, rotates around. Somebody asked about MBO data market right now. We've got our own ways of doing it. Is the signal on the entry bar, Roger asks, or the bar prior? Well, it depends if you're using the trade entry signal. Trade entry signal is going to shift it to the bar that's moving. But if you don't use the trade entry signal, then it will appear on the bar. So just really quick here, it's a little easier to show you this. Okay, so you see right here, okay, this is your signal bar because it's got the zone being drawn out, but the actual signal here, it's not coming in on the next bar, it's coming on this bar, the one that starts the move, okay? If I disable this trade entry signal, all right, you can see the signal right here is coming in on this bar, okay? Still got a signal coming in because this bar's got one, this bar's got one, okay? And you can see there's a sell signal up here, but if I have trade entry signal on, it's actually not a valid trade because it didn't move one tick within the next couple of bars, right? See, so it's gone there. Let's take a look at some more questions here. Yeah, Arun asked about the settings. There is in the user guide. There's a little cheat sheet. I go through some of the settings in there, but I'm going to also add on this slide here, common settings. I'm going to add this to the user guide later. Tona says, can you use it with context? Because otherwise it will destroy your head. Well, that's why I like to use the either here. Okay, let's just go back to crude. So for example, okay, I'm going to turn on the swing filter, turn off the momentum strength, disparity range. I'll just keep it at 89. Okay. So what it's doing is it's looking for swing lows, for bullish signals, swing highs. Now, again, I have it set at 5, which is kind of quick, but if you want like longer swings, set it at 50. All right, so you see, right, bearish, 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 some bullish, bearish, bearish. Going back here, thing to keep in mind when you're using the swing filter, if a market's dropping and you get some bullish signals and it still drops, like here, these two ended up failing, but again, you can catch some nice moves. This is a move from 70 down to 30. You can deal with a stop out here and a stop out there. But then you can do, it depends on what kind of context you want to use. There's a lot of different contexts in the market. Swing highs and swing lows is a good context. Okay, Mark, yeah, I'll take care of that. Eduardo had asked, what's the difference between Delta Scalper and this product? Well, it's completely different order flow analysis that's being read. So this doesn't read the Delta. Delta Scalper reads Delta. This one reads volume and compares it. Okay, let's take a look at DAX. Okay, this is DAX with the, well, again, this is a 30-second chart. But again, this is with the swing filter ramped up to 50. If you take that off, again, depending on how you want to trade, we'll start with just the default here, 150 and 6. Okay. Too much. Kind of curious how it would look with 250. Turn off this. Again, I didn't even show you anything with 250. This is 250 set at the highest. Again, that's a 30-second chart, which is kind of fast for a lot of markets. Go back to 150. So 1 minute DAX chart here, 150 and 6. And check this out. We'll have the prominent point of control. Sorry, well, that's 150 and not 6, just 150. 150 and 6 looks like this. Okay. Add prominent point of control. You can see how it removes a bunch of these. And you could try the prominent point of control without the momentum filter. And you're getting a couple cells in here that aren't really working out, but there's some nice ones in here, bunched up here. And so, but yeah, DAX is a nice market also. A big margin for traders, but it's a nice market. Anthony asks, is this available in Go charting? Not yet, not yet. What is the best for newbies? If you're new to trading, and I tell people this, if you're new to trading, choose an easy market. It always kills me. I see traders coming into the market, they're new to trading, and they jump right into NASDAQ. There's so many other markets out there. Currencies, a market that I think is for a good market for people relatively new to trading is 5 years. Because you got to think of, getting in and out of a position. Does it provide liquidity? And now granted, it is an interest rate, but it doesn't move the way NASDAQ moves or anything, but you could see, 5 years here, right? You could even turn off some. It's a good contract for people just in general that I think are new to trading. It does trade decent volume. You could read the order flow, um, but you could just see here, these are the signals in the 5 years, right? So that's the thing, if you're new to trading and you're trading with real money, there's nothing wrong with that. I don't like that nowadays everyone says, oh, if you're new to trading, you have to go through a funding account. Well, that's just a new thing in the last 10 years. Um, Nothing can replace trading with real money. Yeah, Craig. It's funny because then 'cause I got like two bills from Kinetic. Yeah, one was from them and the other one was like this. And it's like, I wrote to Kinetic. I'm like, dude, what's going on? And they're like, so do you want to cancel your subscription? But I think a lot of people are getting are getting the same thing. But anyway, guys, I'm gonna end it there. My throat is killing me. I don't want to keep you guys on all day. I'll take a look at these questions, and I'm gonna send out the replay. And some of these questions that I just didn't have a chance to get to, um, I'll try and write them up in the email. But again, I don't want to keep everybody on too late. It's already 12:10. So thanks, and Paul, I'll take a look at your email as well. Um, just give me a second here. Let's write this down. So everyone, guys, just check your email later this evening for the replay. We've gone past the 1 hour mark, and GoToWebinar does, once you get past 1 hour, it takes longer to render the video. And again, if I didn't get to your question, I'm going to go through the questions again. I'm going to take a look at them, and I'll try and address them in the email that I send out with the link to the replay. So thanks everyone for coming out. And again, just really quick, the link I'll just throw in the chat here for you guys if you're interested in getting it. I said, it's a great tool to have. I'm not trying to like hard sell you guys. Really, I just want to talk about what the indicator does, how to use it, show you different markets today. Just go to orderflows.com/showhand. Simple. So thanks everyone for coming out, and have a great rest of your Monday. It's Veterans Day here in the US, so it's kind of a public holiday. So take care everyone, and I'll catch you guys next time. Bye bye.